end over here. Cool. All right, so let's go up here. I'm anticipating this swing low and this swing low, but we'll see if we come and rebalance this new day opening gap. Opened up here and we just fell through. So let's start off at 15. So this was our week this week. Coming into Monday, we opened up here on Sunday. So we had Sunday, Monday, Tuesday, Wednesday, and of course Wednesday was FOMC. We had Thursday, Friday. Friday was kind of an odd day, but just a second.
Sorry.
What's up?
Are you going to be here till 5 to feed them?
Yeah, I should be.
Okay, because we're going to leave right now.
Okay.
My aunts.
Okay, yeah, I'll be here.
Okay.
Alrighty. And then Friday. All right, so if you notice in the Discord for the weekly outlooks in the intraday, I had posted this, right? So let's see, can I? Okay, I posted this chart here. Okay, so this exact 15-minute bounce into the 15, and then back up towards buy side. So does everyone see that? Down into this 15, and then up towards buy side liquidity. This was on Sunday night. Okay, so that's the same 15-minute here. Okay, so how was I able to get this specific 15-minute fair value gap and call this bounce? Okay. Now, if we look, we had relatively equal lows right here, right? Sell side. So that was pretty clear for sell side liquidity. we also had this wick in here. Okay, so this wick was the other sell side. And we also had this as Friday's low in here. Okay. Remember, and hopefully everyone's brought a notebook or have something to take notes. Wicks are gaps. Okay. Wicks are also liquidity. Okay. So when you get these swing highs like this, or like these wicks and these swing lows in here, those are pretty clear draws on liquidity. Okay. Pretty clear, just money hanging right there. Okay. But how was I able to get this very specific 15-minute gap, and why not all the way back down here or to fill in the rest of this range, right? Can anyone take any guesses? Any guesses as to how I was able to get this specific 15-minute gap back up towards buy side? Oh, look at that. It's okay. Don't be scared to answer or be wrong. It's all right. It's what we're all here to get better. Any guesses? There's a site. There you go. There's a side chat here. You can type in. I want this to be interactive for you guys, not just. I don't want you to fall asleep. Hello. Strong bullish sentiment. That's one way. Yeah, that's one. Definitely bullish order flow, higher time frame, right? Daily, probably, weekly. But why not? Why not all the way down to this 15-minute then, as a pullback? Is you have some lows in here, right? Okay, well, the answer is bum ba da ba. Oh, let's see if Sai's gonna answer it. See if he answers it before. No liquidity under that. Well, we have a swing wick, right? That could be liquidity. Relative equal lows with this low here. See that low and this low? So the answer is standard deviations. Okay. So what I did was take this high, to this low. So this high to this wick low in here. Now it doesn't look like much on the 15-minute time frame here. Right. But this wick to swing high in here is a manipulation leg higher, right? Before we started to reverse down. Okay. we have been so bullish, right? We needed some sort of measurement of a pullback or a sweep of liquidity. Now, I would not expect it to come all the way back down through here, at least not this week. It could at a later time, right, in the future. But for this week, we were still very bullish. As I said, there's a lot of bullish sentiment. So if we look, okay, just about 4 standard deviations here of this high gives us -4. It gives us just under this wick. And we also have this 15-minute in here, right? What else do we have in this area? Breaker, exactly. We have this swing low. Let's see, low. High. Lower low. Notice how we drag that bullish breaker over, overlapping with this 15-minute. And where there's a breaker, there's an order block. Okay, so you have all 3 PD rays here. You have a bullish 15. You have a 15-minute bullish breaker block in the form of these 2 up close candles. Okay, these are the last 2 up close before we swept the low, and then we never created a lower low after that. So low, high, lower low. And then we started to close above. Once we close above here, we start moving away. She use this as real support, right? And then these consecutive down close candles in here are your order block, bullish order block. Okay, so let's look at this. 1, 2, 3. Okay, so where there's an order block overlapping with a fair value gap, this is a high probability order block and bullish breaker. You have all 3 right here. So there's 3 strong PD rays on a moderately higher time frame, right? The 15-minute. Okay. So just as a note and a lesson, there was how I was able to project down to get our weekly outlook last week to the T. Okay. So that's what I wanted to see. And then we had buy side, and we were before we switched over to contracts here, because we were on this one was for September. So before we rolled over, I was looking at a little bit higher up here, bearish breaker on the daily, and 20,000 as a psychological level, right? Okay, so now, kind of what I talked about today on the social medias is how to project standard deviations to anticipate some sort of measure of a reversal, and you can use this as a strategy in itself. This is how I was able to this is how I was able to, oh, wait, can you still see my screen here? Yeah, you should be able to still see. I think. Can you guys still see the screen? Oh, it's loading. There we go. So, how to anticipate reversals, possible reversals, and project them. So, the key is to look for areas of original consolidation, right? So, if we look, we have this area of consolidation on Friday, right? Once we started to move away, right, it used this as resistance to drop lower. Now, what you want to do is you want to try to gather up where the candle bodies touch in here. So we can do like this. Okay, notice the wicks are outside, but these candle bodies, candle body, candle body, candle body, candle body. We broke below here, candle body closure. We then retest it and then drop off, right? Now, take our standard deviations, again, from the high of this box to the low. We get -2 to 2.5, which is a reversal area. Overextended reversal area would be -3, anywhere from -3 to -4. Okay. Highly overextended after -4. Okay. And over a very heavy market will drop, it could drop all the way to freaking 9 or 11. Okay. But these are very consistent levels. Okay. -1 to 1.5, reaccumulation in here. Aggressively move, and then high probability reversal area, and our second high probability reversal area. Okay. What are we also tapping into? Well, if we come up to the 4-hour, we can see that on Friday, we were tapping into this 4-hour fair value gap, right? So you can look at the higher time frame and see if these areas of potential reversal area, right, around here, align with a higher time frame PD array, like so. Okay. So now we have two confirmations, two confluences, right? Now, what do we want to wait for? So we have original consolidation. We have our standard deviation possible projection in this area. We have a higher time frame PD array. We have relatively equal highs in here, right? So above these highs and these highs in here, but we can use just the high of the standard deviation or of the original consolidation here. So buy side liquidity. Now, here's what you want to wait for next. Change in the state of delivery, right? CISD. You're changing the state of delivery, and this will help you. I think Boyo talked about it in one of the chats earlier. Is this will help you, okay? So if we hit replay real quick. Let me hit replay here. Okay. This will help you in a lot of your chain trades and really increase your probability and your win rate, okay? We want to count how many bearish PD rays we have right here? At least 2. So we have 1 and 2, right? Now, in order for order flow to change and shift short term, right? Because when we're on the 1 minute, we're just intraday scalping, right? We're looking for these internal moves, internal liquidity in and out of the market about an hour at a time. Okay, we're not swing traders. We're not holding for the whole daily range, right? Although you're going to have your trophy trades, those trades will come. But what we're focusing on is short-term, internal to external, external to internal liquidity, right? Little runs of liquidity sweeps, market maker models. Okay, so what we need is, in order for price in order flow to switch from bearish to bullish, we need at least 2 bearish fair value gaps to be broken with a candle body closure. Okay, not just the wick, we need the candle body to close above it. So price trades up, this one broken. So we have 1. We're waiting. There's 2. Okay, broken. So in here, you're changing the state of delivery. To the upside. Okay. Quick quiz. What do we have right here? What is this now? Yeah, this one is an inversion, but what else is that? Both of these together. Yes, good job, guys. BPR. Let's go. Yep. Balanced price range. So should price come back all the way down to this fair value gap, this lower fair value gap? In here, this bullish one? Should it come all the way back and touch this one? If this is a balanced price range? No, right? Exactly. So we have a change in the state of delivery, right? Everything else is lining up. And all we need to do is target the original consolidation, right? So our market maker buy model, okay? Sell side of the curve. Here to a higher time frame PD ray. Higher time frame PD ray to, oh, what is that? Don't want that. To internal buy side, right? So now we have our change in the state of delivery confirmed. Now we're waiting for a bullish fair value gap to form. Okay. There it is there. Okay. Slight tap. You might have missed that. Right? You might have missed this entry. But here's my tip to you. And write this down. And use this and write this down while you're trading live. Wait for price to come to you. Right? Don't try and chase it. Let it give you your entry. Let it submit to your strategy and your rules. Okay? Don't feel like you're going to miss it. If you do, guess what? There's another macro around the corner. There's another setup around the corner. Day in and day out. Okay? So, we play price forward. Right? You might have thought, oh, I missed my entry right there by a tick, and you're trying to probably get a bad fill or whatever. Just wait, right? Even there, there's your entry. Okay. Now, I'm not sure, but we'll look and see if there was SMT with ES here. Okay, so here's how you add even more confidence to your trade. We have ES pulled out on the left, right? We'll mark up the same low in here of this gap. Okay. Notice this. Let's see, where does it? This gap here. It's this one. So we take this low. Looking at this one. Okay. There's your SMT. Okay. Notice how on ES we do not create this fair value gap. Okay, so you have a fair value gap SMT, 1 minute fair value gap SMT. There's a volume imbalance, but there's no actual, well, there's a small one here, right? So plus the volume imbalance. So there's one, but we actually tap into this lower one here, right? We don't come below this balanced price range in here, but you have SMT. Long story short, we have SMT with ES. Okay, so there's your entry. Now, let's go back one on the chart. All right, so we're waiting for our buy into there, right? A little premature, but for all intents and purposes, because of the replay, there's your entry, right? Inside of this gap. Now, where's your stop? The fair value gap that was created here, we have 1, 2, 3. So your stop loss should be below this wick. Okay. We don't need ES anymore. That's just an added confirmation, okay? Write this down for your notes as well. There's usually always one more little tiny sweep of liquidity before the move happens, right? So what do we have inside of here? Relatively equal lows. Some time distortion. We have a small sweep of liquidity, right? And then SMT. And we start to move away aggressively, okay? Now, this is like the best entry possible. I'm pretty sure this is my entry on Friday, where I passed another 50K funded futures in this one trade. I passed it, targeting this high. Okay, so put our take profit up here. Okay. So we follow the bullish order flow, right? Now, how do you know to continue to hold this trade? Right? What if you have some sort of indicator on, something flashes and turns on, and you get scared because a higher time frame or a 5 minute you're tapping into? On the 1 minute, what? Respecting fair value gaps, exactly. So in order for price to shift from bullish order flow, which is the buy program that we're in right now, back to a bearish one, what has to happen? What does it have to do? It was one of the confirmations we used to buy here. Anybody? Can you guess? What does price have to do to turn bearish? For this to invalidate the rest of our trade and us not confidently hold to our target. Disrespect the fair value gap, exactly. MSS. Or what? Change in the state of delivery. Exactly, right? And so in order for that to happen, what does it have to do? It has to disrespect how many fair value gaps? I know these are simple questions, but just to ingrain it, right? How many fair value gaps does it have to break? 2 minimum, right? So if we have 2 here, right? We have 1, 2. There's a third one. Where can you trail your stop loss to? Ta-da. So as you follow order flow, right, now we can just keep marking up. So now we have 1, 2. Can roll our stop up to here. Now we have this tiny one in here. So now we can roll our stop up here. Right? If you haven't taken partials, or if you have more than one position, right, you can take partials off at 75% of the trade. Right? If we were to measure this up, in other words, we'll just see. We'll do it this way. Your entry to 100%, right? So about 70, you can start taking partials if you want, right? Pay yourself at least one contract or whatever, one mini, micro, however you have on, or trail your stop into profit, right? At 75% of the trade. So now we have 2 bullish gaps here. This fair value gap, 3 candles. We can use this low. Right? You might be getting scared here, like, oh, price is slowing down, but we need to break 2 bullish gaps, right, in order for us to change in the state of delivery. Our stop's safe here with these 2 fair value gaps protecting it. Right? We create a small one in here. Right? Notice we had this tiny one here with this volume imbalance. Right? We broke it. Okay, we broke 1 candle body closure, but look at the second one in here with this volume imbalance. Right? Look at 50% above it. Consequent encroachment. Well, we have to include, yeah. Here. Right? What do we have overlapping here? Well, we have order block. Okay, so we're just following price action. Order block overlapping with the fair value gap. That's your high probability order block. Not just any down close candle. They overlap with the fair value gap. That's your high probability one. Right? So this entire 2 down close candles here. Right? So you have, we tap into it and we move away. Now we create this bullish fair value gap. We can get rid of this one. 1, 2. We have 2 plus the order block. So now we can trail here. Or if you want to become more aggressive, you can be right underneath 50% of this order block, right? You can use that Peter rate. But if you want to be safe, to give it some room to breathe, however you want to be aggressive here at your very close to terminus or to take profit. Right, so we're just following order flow. 1, 2. Go above here. Right, and we have another order block in here, overlapping with these gaps. Okay. Little extra tip here, right? Look at these wicks touching right here. What is this red line? Does anybody know by chance? Sorry, purple line now. Yep, nice. Good one, Sai. Immediate rebalance, right? Touch the wick. Wick's touching. We're staying in the top range of this candle's wick. So we should get speed. So we dip a little bit lower into this volume imbalance, but ultimately take this buy side there, right? And your stop was safe the entire time, right? Now you can get more aggressive if you want to, you know, practice getting at least to 50% of the original consolidation in here, or use the order flow like that. And with the rule of your change in the state of delivery, right, it has to break 2 fair value gaps in order to shift, right? In order for it to start to give you the alert, right? If we break 1, it should be like, okay, we broke 1. Where's my next one, or my last line of defense, right? So, perfect example of some external PD ray and liquidity, standard deviations from the original consolidation, and your buy. This is your market maker buy model. Okay. So this entry is your low risk buy. Then you have your silver bullet right here. Okay, second stage of accumulation and distribution in here. So you have 1, second stage, and then 3 and 4. Just kind of trickles this way up towards this consolidation. Okay, a little trick, we can also reverse engineer it. Okay, we use the top, right? We use this box to project down, but we can also project up. Right? So if we take the reversal area to buy side, actually we'll do it, it's the other way here. We'll pull buy side down, minor backwards, but buy side to the smart money reversal in here. Okay, so around 0.25, this is your low risk buy. Okay, so low risk buy. .5 or 50% of this range. This is your famous silver bullet area, right? All the silver bullet is your second stage of distribution. This is your second stage. Okay. After here, you should see aggressive movement away. 0.75, we should see that last stage. Reaccumulation. That's distribution. Last. And notice how these levels line up pretty perfectly, right? Oh, this should be slash. Slash, slash, slash. So lots of value just in this one little market maker model, right? Lots of tools and tips you can use in your trading, right? Anyone have any questions on anything we went over so far? Open it up to some Q&A here. I'm excited for the newer people in here because they're probably like, holy crap, this Discord be dropping. We got tons of value in here, man. We really do this in here, so. Just waiting for questions to come in. Hey. Dun, 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 dun. Ruth said, just starting the bootcamp video, so this was very helpful. Nice. Yep. 100. Yep. Size in the bootcamp, loyal traders in the bootcamp, they can tell you, man, it's really eye-opening, and then it's just a matter of time. And when you back test and you forward test, you know, and you see it repeat over and over again at certain times of the day, these little models like this is really all you need, right? And you can use things like this to help, rinse and repeat, to help confirm and give you confidence in your trade and your direction. A lot of it is just patience, right? Once you have your strategy and everything, is just being patient and waiting for that setup at that certain time. And if it's not clear and it doesn't do what you want, then, you know, don't worry about not trading that day, you know. Or the same with losses, right? If you take a couple losses in a row, you have to mentally be okay to take that on the chin and go and move on to the next day, because those 2 losses can turn into 4, the 4 can turn into 8, the 8 can turn into 16, and then you're on tilt, right? So that's another helpful psychology tip there, is take two losses back to back. Just, it's okay to have a red day or a slightly pink day. Don't let it turn into a freaking bloodbath day. So, yeah, so open to any questions anyone has. Deviations, another example on how to use it. Sure. Okay. Because this repeats over and over again, it's not hard to find another example. Okay, so here we have the London high. So we have a point of interest. Where is it? Okay. London high sweeps the high. Okay. Let's say price is here. Okay. Swept the high. We want to see how far could price possibly go above this high. Well, we can look at where did price turn around at, right? Right around here. We created this low, then we created a higher low and a higher low. So what was the leg that took the final sell side before we started to shift? Right in here, right? This last move in here. See that? So we can take our standard deviations and see, project it up, way overextended and lines up with 5. Okay, so once we get to 4 here, and you're like, oh, well, Andrew said 4, anywhere from -3 to 4 is overextended, right? 5 is definitely overextended. But let's just say it comes here and you're like, well, I'm waiting for it to reverse. Okay. 1, we're so close to the London high, I would just be patient and wait to see, do we sweep the London high here, right? 2, what do we need to confirm this bullish movement to bearish? We need a change in the state of delivery, right? So even if we're here, right, and we're looking for a potential reversal because we've been bullish and we're waiting for some sort of pullback, right? We need some liquidity to be taken. We took this high, right? We're getting close to here. We mark up the bullish gaps. There's one. Where's another one here? We gotta look. There's another good one there. Okay, so as of right here, we need it to break below all of this price action for us to look to even think about taking a short. Okay. And then here we were so close to London high, right? So we move price forward. Okay, now we have this bullish gap. So now we need to break below this swing low, right? So let's say this is what we're waiting for, our change in the state of delivery. Oh, would you look at that, right? Nothing yet. So see how that can help you not jump in too early, right? So we have 1 bullish gap, 2 bullish with this volume imbalance. Right? Small little PD array in here, very tiny. So we need a change in the state of delivery. Beneath 1, 2, we need a break this swing low. So we need to break beneath this. So we're just being patient. Boom. Broke 1. Okay, we can zoom in. Probably a tiny little volume imbalance there. Once these bullish gaps are broken, right, they can become inversions. Now, how can we measure how far down is it going to go? Right? Well, we now have a change in the state of delivery. Where did price last tap into as a bullish PD ray before we ran the high one more time? This swing low. So high to low. Oh, would you look at that? We can target 2.5 area. Okay. So what lines up with this area? Well, we have this area in here. So target, and then we have -3 to we got this wick. Okay. So we have some targets. Break 1, 2. Okay, so we tap that inversion. I'll be waiting to see if we get one more. Yeah, so that's nice there. Right, so we get clear displacement. The price just runs off there. It's in here. So you can also, this is another tip, we can use this run as well. So we have internal, and then we can also use the next price swing down as a potential projection. You can use all of these little swings in here, right? Even this one, this high into here, right? This first swing before a pullback down. Okay, so we can target -3 and 4. So, but notice how we have this bounce in here. So I would just keep an eye on this, but you can still shorten here. Stop loss above this high. And then I would target probably this these relative equal lows in here. Oh, stopped out there. Well, you have news here at 9:30 open, so. But look at 2.5 standard deviations, right? It reversed there. So if you got in on the inversion, then that would be ideal, but there was no other entry other than here. But once we closed above 1, 2, didn't even give you a chance here at the 9:30 open. So another tip too, I wait for the 9:30 open, let it do its thing, and then get in. So, but another example there. Let's clear these drawings. Any other questions before we call it? We can do another example if you want. Where's my settings? So you have 0, +1, and then -1, -1.5, -2, 2.5. -3, 3.54. I go all the way down to 9. I skip 10, I go to 11. So, and then I have -2 to 2.5 is red, right? Because this is typically I like to use those as targets or potential reaccumulation, distribution. And then 4 is like a very overextended area. Okay, take a screenshot if you want. This is Wednesday. 203. Okay, again here. Oh, not the low. Exactly. Yep, that's my point. You have to set your management for yourself and stick to it. Right? So we have London high again here. Look at this internal, right? The last sell side before we started to turn around and go for a London high. Take this low to the high. And here. This run in there. We can use that leg. So close to 2 there. Get more precise in here. Let's see, where are we at? No, that's what I would use. Again, you can use multiple swings to match it up, right? So we can use this one like this. And then you can also do this, like these swings in here like this. And we can also do it on the other side, like this swing low in here. Right? And we can line up the most high probable. So 1.5 to 2 right there is right in here, which lines up with that London high close to it in here. Okay. London high. One gap broken. So we need to break this second gap in here for a change in the state of delivery. Wicks, displacement. Okay, so change in the state of delivery, and it's just rinse and repeat. CISD, low, high, low, higher, high. There's your breaker, right? This can now be used as an inversion. We now have a bearish gap. There's your sell. Right, as it taps into there. How far can we go down? Well, let's project it. High to this swing low where you have the change in the state of delivery, or your breaker low. Some nice internal swings here. -2, 2.5. Or, to me, look at this little area of consolidation. Right, what we just talked about. Original consolidation low. Right, not needing the whole swing to the lows, but a little area of consolidation. Measure it up. Nice 7 there. Boom. Original consolidation low. Dips in, and then what's it do? Attacks the buy side. Okay. So market maker sell model to a buy model. Right? It's, all these things are overlapping. So we will call it there for the hour. So thank you guys for joining the free class. If you're interested, join the boot camp. Today's the last day for the one-time payment, and then we're going to be moving to a monthly subscription. So, or if you don't want that, just come trade live with us. Right? You can try it out free for 7 days. We trade live in the morning, Tuesday through Thursday, sometimes Friday. Alrighty. So link for the live trading is in the live trading access channel. If you want the boot camp, there's a link for the boot camp in the announcements channel. Hey, no problem, bro. My pleasure. So we closed on Friday. Then we opened on Sunday today. So new day opening gap, or new week rather. New week. So let's see how we react in here. Alrighty, guys. I will catch you guys tomorrow for live stream. Potentially. Maybe Tuesday. Tuesday probably better. We'll look at Forex Factory. So 9:45 Tuesday. We got 10 a.m. news. Wednesday looks like nothing. Thursday we got Fed, and Friday 8:30. So 9:45. We'll see. Monday might give us something good. Tuesday probably be something later in the session. Wednesday looks clear, and then Thursday looks like a 10:45 macro day for Thursday. So we will catch you guys later. Peace out, everybody.